What's going on? Shit. Oops. Sorry. That's pretty much summed up my day. Man, it's been... Anyways, welcome to tonight's live stream. What a guy. We'll start again. Wait there. Welcome, ladies and gentlemen. My name is Tino. Welcome to Traders Reality. Yes, you are tuning into the live of the market close. What's been going on today, man? Look, I'll be honest with you. I'm going to be talking about my opinion of Bitcoin, whether it's relevant or not. That will be down to you as the viewer. But we're going into a very important day tomorrow. And at the 22V consensus forum, where they go out and ask several investment funds, traders, and what have you, and they ask, what's the story? What do you think's going to be? What do you think's going to happen tomorrow? And we've pretty much got an even split with everything in what they think the news is going to be like tomorrow. I'm going to give you my opinion, and then we'll see what happens tomorrow, because things ain't behaving the way they should. The euro cutting its interest rates. The US is sat there scratching its head thinking, what shall we do? Is 3% on inflation the new 2%? Well, it's one of those ones where if tomorrow's data suggests a surprise reading on the non-farm payrolls, we've got a problem, man. Like, big problem. Because all of the data that's come out so far about the jobs market can be put in the bin, and we'll be relying on the fact that the US economy is doing fine. So that's what's got my head going. It's like, if the US economy is doing fine, soft landing effectively can be achieved, why don't we start cutting? Why not? If the Eurozone's doing it, no problem. Maybe the Euros... Nah, I'm not going to say it, but hey. Anyways, with that being said, let's get into this live, ladies and gentlemen. Good evening, good afternoon. And let's have this conversation about my opinion on BTC. Here we go. Now, first things first. Today in the Discord, we were trading on the S&P. My days, the S&P, man. What a BS asset. It really is. And unless you're watching the depth of market, and I'm talking about this nut job right here, okay, unless you're paying attention to it, like earlier on this morning, they were holding this range, the 27,244 contracts in that zone. It started off around 21. And then they just held it, and then they just rejected that zone. I was playing shorts, I was playing longs, and they came all the way down, and we were looking for a long, and then it just went down and swept. I closed my short, I closed my long, and then re-entered at 5349 or something. That's what it was. Yeah, 5348, whatever it was. And we saw the shoot all the way back up. But man, it has been a treacherous day trading. It has been rough trading overall. Just look at what's going on. I'll talk about Bitcoin in a second. But if we just go over to the S&P, you can see, Matt, look what range I was trading today. The move that I caught was just this one candlestick. But we were putting two and two together to understand the ranges. And it was really important that what I was doing in the Discord was just talking the guys through the idea of the Brinks box. If the Brinks box couldn't sustain itself, then we're looking for prices to go lower. This is where my original shorts were. They came down, and then they come up, and then they come down, and then they come up. This has been a wild day. Now, I traded on my Apex accounts today, and I'm not impressed with it. I'm not impressed with it, but we come... Oh, hold on. So we come out with... It's not 181 trades. I didn't take 181 trades today, okay? So I come out with around $4,200 on my performance accounts over here, and it should have been... There should have been easy... There should have been about $1,500 on each account, to be frank with you. I was... Look how many times I'm trading. And I could have, 1, 2, 3, 4, 5, 6, 7, 8. We could have easily cleared 15K today. Could have, had I just stuck to the narrative. And I should have got out when I needed to get out, but I gave some away inside of this range when it took the nosedive, closed off the positions, and then it shifted back up again, which is why the win rate is terrible on these trades. I had 6 winning trades and 6 losing trades on that. So you can see it was a bit treacherous for me today, but it's just been difficult because of what's going on with the non-farm payrolls that are coming out tomorrow. Now, as I said just a few minutes ago, we've got this, look, there's no consensus about market reaction to payrolls tomorrow. That means investors are like, we don't know. They really don't. Check this out. It says here, a 22V research survey shows there is no consensus about the market reaction. 36% of investors are betting on a risk-off move. 33% saying risk on, and 31% negligible mixed. All right? When you're seeing that, you then say to yourself, well, let's just take the idea of price action, and I'm going to lead this over to Bitcoin. All right? Look at where we are. I mean, we would have to have a phenomenal reading tomorrow to suggest that the S&P is going to go up. Quite frankly, we get a low reading on the unemployment, a high reading on the unemployment claims. That is yippee-ki-yay. Awesome. We need people, and this is the sad truth. We need people to lose their jobs. That's the truth. We need the average hourly earnings to come in lower. They're projecting it to be higher. And we need the unemployment rate to come in higher than 3.9%. Remember, Powell said it. You know, if it can tick up a few tenths of a percent, then we're going to start paying attention to the interest rates. All right? It's been at 50-year lows, man. You know, Biden economics, happy days. What a guy. Anyways, with that being said, it's going to be a very interesting day tomorrow. And I genuinely believe that the S&P is going to take a slump. I really do think they could do that. They're either going to come down first and then reverse out. There's going to be a manipulative move tomorrow. The data's going to come out and get everyone on the one belief that, oh my God, it's really bad news. And then they'll just reverse it. And then the narrative will come back into play. You know, that's what I think is going to happen tomorrow. We've got this huge vector candle that they come back into and they tapped away from it. So there's clearly interest in this range, but it's all going to quieten down going into tomorrow. Okay. Today, we had a little bit of fun with the setup. So let's just go with, look, just for disclosure, I'll show you exactly what we did. These setups I shared this morning to the Platinum members of the website. And if you want to take advantage of these setups, you get 20% off your first month. Just use the code MEMBER, new member. It's pinned to the top of the chat and in the description if you want to check that out. Okay, go to tradersreality.com. Happy days. Okay. So I was sharing a projection on the idea that Euro was going to come down to come up, all right? And did we get that? Well, not as aggressively as we wanted. Okay, let's be straight with you now. Look what we got. We got a move up. We got a move down. We then ended up with the move up, okay? So it was a bit tricky trading Euro today, given that they did decrease their interest rate, okay? We go into gold itself, and we anticipated that gold was going to try and make a move up. So what we did here was we assumed that during the data, sharp move down, consolidate, shift out to the upside. That's what we were looking for on gold. Now, what did gold do? Gold didn't do that per se. It came down ever so slightly on the 4-hour here. Let me just drop it to the 1 hour to make life easier for you all. They came down to here and then they shifted out. So if you managed to get your bids in there, guys, then congratulations. Didn't quite get the move we wanted. And this is what usually happens, ladies and gentlemen, where if I share a projection, I go in my mind, I'm thinking, right, let me eliminate all the idea of what could happen. If I'm expecting the end result for it to reverse back up, then even if I were to run along from this point right here, could I allow my risk to absorb something like this? Because what I found is some people will take the short and then they'll just wait for the long. And I gave the 2 plays here just because we had news announcements. Now, let me just show you what happened on oil. Oil came through and through like clockwork. If we go over to oil, you can see here, oil came through, they marked up, and I said, take profits at the 50% point right here. And that's exactly what had happened. They reversed from that point, take profits. Now, going into this evening, there's a good chance that they could continue back up again, okay? Because the stock market came down, oil technically would be going up, okay? Then we get into cryptocurrency. This is what we expected from Bitcoin today. So I wanted to see Bitcoin come down to try and come up, okay? So we go into Bitcoin and have a look at that bad boy. So what did we get? We saw, what is that? Oh my God. Bitcoin did not come down. But if we went with the projection of it going up, they would have seen the success. And then at the 71,000, what I wanted was a short from around the 71,670 zone. If you're going to play the short inside of this range, then you're going to look to try and aim towards the 70,349 in principle, okay? And then we saw Bitcoin come down to 70,115, which leads me on to the topic at hand on my honest opinion about Bitcoin, okay? So we've had great news with crypto. Look, Robinhood, where is it? Come on, man. Robinhood signed a deal with Bitstamp, $200 million deal, okay? And that trading platform, Markets Hood, here we go, saying Thursday agreed to buy crypto exchange Bitstamp for about $200 million in cash, speeding up the broader push into digital assets with its biggest ever deal. On top of that, you've also got Kraken wants to do a $100 million pre-IPO raise. So the top exchange, Kraken, is in discussions for a final funding round before going public. That only means that Kraken effectively will be able to join forces with Coinbase. Now, hold on. Someone says that Nvidia is overvalued. Like, tell me, do you think Nvidia is overvalued? Here we go. Coinbase getting ready to break out of $260 a share. I'm expecting about $350 a share for Coinbase. That's my price projection for Coinbase. Fund ownership is actually increasing on Coinbase right here, as you can see. In the current quarter, March 24, they've increased nearly 154 funds have started to add it to their portfolios. Management holds a stack of the stock. Funds hold around 35% of the stock. I'd be expecting management to start, why are they retaining so much? But then you could say to yourself, hold on a second, maybe they know something. Maybe they have something in sight, based on the buying and selling of specific participants. And that leads me over to this bad boy here, the miners position index yet again. So this is what I think can happen. Fundamentally, Bitcoin will be going higher, all right? But we could say Bitcoin's going to go to 250,000, 300,000, $1 million a coin. And then they'll say in 2035, all right, cheers, bro. I got a better rate of return from a pension scheme by a post office. I'm not interested in that money there. I want it now kind of thing. And that's the mentality that a lot of people have in crypto. Who do you have to blame for that? Meme coins. Meme coins do facilitate the idea of the get-rich-quick adventurer, okay? And when you've got that in play, people come to crypto, or should I say they come to Bitcoin, and they anticipate the same thing to happen. The slower it takes Bitcoin to climb up, the higher it's going to go, in my frank opinion. But as we look at the position miners index, you can see that as Bitcoin's been going up, they have been more reluctant to sell. Now, forget what we've been talking about lately, where we're looking, all the miners are selling. Yeah, they're selling inside of these ranges, which effectively leads to it. But when they're selling as it's peaking out to the highs, down when price drops, you're seeing that selling starting to diminish, okay? And then we would make the assumption that that's where they're buying from, okay? Now it's starting to work back up again. We're starting to see a little bit of selling down at the lows here, but we're at an all-time high, near enough, okay? So the idea is now non-farm payrolls is going to be the trigger for Bitcoin to either flop or break the all-time high. That's what's going to happen. And I'm waiting for I'm looking at $85,000. That's my price projection for Bitcoin. And I'm looking for that just after summer. Okay, so come September time, I think Bitcoin would hit 85K come September. And the only reason I say that is because during the summertime, investors are usually a little bit more optimistic. Granted, they do leave the exchanges and they go on their holidays. But general consensus would say that during the summertime, people are a little bit more prone to spending the mullah. And that goes with investors as well. So I expect by September this year, Bitcoin's going to be at 85K. Yeah, I'm going to put that there. Tino, happy days projection by September. There you go. Screenshot that bad boy. Yeah. Screenshot it. 1st of September. I'm saying it now. 1st of September. Cool. Thank you very much, ladies and gentlemen. Have yourselves a wonderful evening. I'm joking. So, yeah, that's where we are. Okay, here we go. Let's have a look at what you guys are saying in this chat for a split second. Here we go. So what we got? Tino, Bitcoin top September 2024. Okay. You meant 8K, right? Well, we kind of did hit 8K and people lost their shit when I said that. I said Bitcoin will hit 8K. I didn't say what exchange. All right, forget it anyways. But a gentleman in the channel just now, not just now, earlier on, said that Nvidia is overvalued. Bitcoin was overvalued at $100. Bitcoin was overvalued at $1,000. Bitcoin was overvalued at $10,000. That finishes that discussion. Tino, what's your thoughts on how much liquidity real-world assets can bring to crypto? $20 trillion, my friend. That's what I think. $20 trillion. Real-world assets. Let's be honest. You get cryptocurrency regulated, different story. All right? That means real-world assets will be purchased by real-world people. You know, the guy that's on my thumbnail right now, he's that guy. He's your mum and dad investor. He's the guy that's buying Bitcoin. You know, he's come... where was I? Cyprus, that's it. Went to Cyprus and I went to my coffee shop where you can pay in Bitcoin. Happy days. Paid the guy and he was like, yo, you back again? I was like, yeah, man. Paid for my coffee in Bitcoin. Happy days. I left. Went to another shop and can I buy something in Bitcoin? And they were like, what? I thought, see you later. Literally, what? That's poor. Because the shop opposite, I can buy coffee with it. That's education. That's information. He understands it. That's why he's got his business running with it. And then the shop opposite, which the shop opposite was a very well-to-do shop. Like, you know, it's where luxury clothing is sold in Cyprus. All right, a T-shirt's like $600, 600 euros. And you're like, okay, yeah. Can I pay in crypto? Oh, excuse me? You just killed your credibility as a luxury clothes seller if you don't accept Bitcoin. That's the thing, you know? Where you think it could be, it ain't. That's my story. Tito, please, if we have a pink color on 4 hours time, can we trade that to expect that it will reach that level? Listen, if you are, how many of you are new to this live stream? That's the question. Just type 1, okay? Tino, loving the platinum membership. How do you determine whether, thank you, bro. How do you determine whether the market is more likely to reverse at the wick of the vector candle versus the middle of it? That right there, okay, is... Okay. So let's look at this on the higher time frames, okay? If we were trading the logic of Bitcoin coming back into the midpoint of the vector candle, okay, you would have technically seen a very little, just a little bit of a drawdown, okay, because it did come down, it came back in, and the next candle up and down, and then it effectively went and made its way, okay? When you're using it on lower time frames, it's kind of a different story because the higher the time frame is, the more leniency you have to give to allowing that concept to come into play, okay? So here's an example over here. Let's take the 1 hour time frame on Bitcoin just to put it into perspective for you and answer your question, right? Look at this. You see this candlestick? There's your green vector. Take the midpoint. And what do you have? When you zoom in, you can see right there. Man, the green vector comes in, and if you were going to say, right, I'd expect them to recover the 50% of that range, and if they can sustain that point, I would then want to take a long, okay? You would be waiting for the candle that looks like it's getting ready to try and recover it. This one didn't. They swept up first, and then they worked to the next candle, and then the next candle came down, recovered the vector midpoint, and then closed back up, suggesting that the trend was going to continue to the upside, and you could see that they could favor higher prices because they were sweeping the highs. So there's interest up there. Each candlestick is a psychological thought on what the masses are doing at that point in time. You might hear it sweeping the highs, sweeping the lows, and you've always got to look at the vector wicks. Look at the wicks, ladies and gentlemen. You leave this live today, okay? Leave this live today, and if you don't ever come back, always pay attention to the wicks. Always pay attention to the wicks, because the wicks they're telling. Wicks at the lows means they're grabbing the orders to the downside, trapping the retail trader in the wrong direction. Yippee-ki-yay, they reverse out. Make sure you got vector candles that you can trade back into. Likewise with the bigger time frame. Look what's... And this is what I mean about Bitcoin going higher. Do you see any wicks on the 1 hour time frame? Now, when I say wicks, I'm talking wicks. Something like this. Something like this and this. We don't see it up here. This is a very controlled range, with the exception of this candlestick right here, and of course, this little one right here. Other than that, I don't see many bold wicks. That means they're not done with this range, and tomorrow is going to be the revealing thing that could lead Bitcoin to make a lovely sweep towards 72,000 and liquidate all those short sellers right here. The short sellers, they've had their day today. They're like, okay, what did we say earlier on? We were saying that they would want to get more people to commit to shorts. They did just that. Look, the shorts have been committed. Look at them adding more shorts. And look at these smart dudes down here buying Bitcoin as the longs get liquidated. Now, the longs are naturally going to be forced to put in more margin, right? The shorts have already put in the margin and new shorts have opened. So tomorrow we're going to know. I'm not going to stand here and be like, oh, I know where Bitcoin's going to go next. I fucking don't, and that's me being honest with you, okay? I trade the logic of movement, momentum, okay? All right, today we had a nice little return today. $4,200 scalping the S&P, okay? But that's scalping in real time. Do you know what I mean? Like I'm looking at the orders going in and out, all right? But when it comes to understanding where it's going to go, you're asking for the mystic meg, you're asking for the prophecy. Doesn't make sense. I'm suggesting Bitcoin's going to go to 85K because I'm factoring in the idea of summer and historically what investors like to do during the summer season. It's historically a time where people spend money. Go onto your Instagrams and your TikToks and your Twitters and your X. Everyone is there showcasing the Lambos. They're outside, the sun, the sea. Just that's what it all is. And that's a time where people get invested. Okay. What else we got here? I hope that answers your question, by the way. Hey, Tina, what's your thoughts on Atos? Is it worth looking into? It's free for crypto trading. I went and bought, when Atos first came out, it was free for crypto, but because you're allowed to add specific brokers to Atos, I went and bought the lifetime license 2 years ago. I've never used it since. What a guy. So, yeah. But it's a decent platform. I know it's evolved, and it's just going to get better with time. But I did actually, tell a lie. I did use it 2 weeks ago, because I just wanted to see if I could get something in terms of the depth of market from it. But, yeah. Okay. Tino, can you please explain again for the 100th time, what's the difference between catching a knife and confirmation of a breakout from an M and a W formation? Look, M's and W's, my friend, is all psychological. Again, it's all behavioral, okay? This is a structure that we have in our minds. And if we can find this structure in the chart, then we understand that they repeat the same thing over and over again. So let's just try and look at it like now. Here we go. So you got a little one right here. Nice little W formation, rise, sharp retrace, continuation out. Fine. Okay, what else we got? We got one here? Yeah, of course we do. Variation, of course. Look, little W formation, rise, retrace, continuation out. Fine. Okay, what else we got? Here, I've got another one. W formation, rise, retrace, rise, retrace, rise, retrace, rise, and then it drops. Cool. All right, then. So, rise level 1, drop. Rise level 2, drop. Rise level 3, peak formation, drop. That cycle there is this cycle here. W formation, rise level 1, rise level 2, rise level 3, peak formation, drop level 1, drop level 2, drop level 3, peak formation. Take that logic, add it to the chart. Do you see it right there? Of course you do. W formation, shift out. M formation comes all the way back down. And look where it happens to reverse from the same place. It's a phenomenon. It's a mad thing. But what you get with the hybrid system is you get to utilize the vector candles. And when it comes to catching a knife, you've got to say to yourself, time and vectors. Vectors will give you the clue when they're trying to get away from a specific zone. Because remember, this area here is a manipulation zone. And I'm going to bring it back to school yet again. Here we go. Short sellers come into play at this point right here. And this is for anybody new. Short sellers come into play. Price is going down. They're losing their brains. Where's that in the chart? Well, that's right here. All right. So we're going to break it down. That's right there. If you can see that, red vector candle. Okay. Watch this back again and you'll see. And then go back in the charts and find it. You'll understand exactly how to trade it. Okay. So price is going down. Red vector candle comes in. Everyone's going short because the market is dropping. In the meantime, market maker is buying. He's bidding. Buys, 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 buys. It then forms a low. Usually the low is formed with a stopping volume candle or a sharp red vector candle. Do you see that? Well, here we go. What we got here? I've got a sharp red vector candle, near enough, but I've also got a stopping volume candle right here. So the stopping volume candle is effectively price, goes down to the lows, sweeps, grabs the liquidity, commits the retail trader to stay in his short. Happy days, he reverses it back out. Okay? There's your stopping volume candle at the lows of the W. Now, with that being said, price then reverses back up into the midpoint. What happens here? Well, the guys that were short are now going to be forced to buy to cover. So they've got to get out of their short, otherwise they're getting liquidated. And then the market will effectively keep on reversing back out. Now, in this instance, it came up a little bit too much and completely shaken out all of those retail traders who were in shorts, okay? At this point, as it's going back up, market maker is closing off his longs. At the same token, he's building his shorts because the guys that were originally in a short are now in a long. So what you're looking for on this retrace back up, you're looking for green vector candles, and ideally you want to see price going back into a moving average per se, because this is how retail traders are looking at the candlesticks. That's how they look. They react to when it goes to a specific point or when it goes to another point. Quite frankly, it's all about how many guys have bidded here and how many guys are offering out here. How many guys are going to be bidding here and how many guys are going to be offering out up here. We're just exploiting the retail trader's psychology because he thinks that if price is going up from this point towards a moving average, he's got to go long because it's broken the key moving average. Bang, it comes back down again. Some of you might say, yeah, but Tina, what about the first green vector candle that goes above the 50 EMA? Well, the first green vector candle that you see inside of this range here was there. So that is not a valid green vector candle above the 50 EMA. When you see one afterwards, it doesn't count. Why? Because this one should have been the one that made the move and you could see it was weakness. And they couldn't even clear the range over here to break out and continue higher. Plus you had the 200 EMA suggesting everything was going down. And then of course you had the vector candle imbalance right there. It was always going to be flopping from this point. Which leads me on to the next bit. The guys who effectively run their longs from here end up getting long and they get liquidated. So you want to see red vector candles coming into play on this side. Go into the chart. What do you see? Red vector candles coming into play right there. That's the trap. That's the key. And what is the trigger to send it back up again? Stopping volume candle in the opposite direction. There's one right there. Now, we just pulled this out of the blue, but you've effectively then need to wait and see for green vectors to shift out of the zone because whilst it's been dropping to the downside, market maker has been building his bids and buying up this whole range in preparation to sell it, which is why they move aggressively away from the zone. That is 101. That's not a pattern. I can easily say to you, yeah, man, just trade the W's, go back in the chart and find them. You can do that exercise. Congratulations. Now you've got this segment of the video, which effectively is giving you the psychology behind what's going on. You've got to run that dialogue in your brain. I'll give you an example. Here is today's dialogue. Where is it? Let me get my Discord up. I'm going to show you what I was doing in the Platinum chat. And I'll just give you the explanations to why price was going up, it was going down. Where are we going? Here we go. Here we are. So here's the Discord right here, okay? And it was during all of this. This is me just talking away. Look, they can't break the last night's high. I'm out. I was talking about certain trades. But I'm giving the guys the dialogue. Here we go. I'm giving them a dialogue of what's going on. Okay, just explaining. They were sharing the charts as well. Nvidia and NASDAQ moved up and what have you. You know, we were having this dialogue, continuous dialogue. And this dialogue, okay, is effectively this. We're trying to understand what they're doing inside each of these points. And in my opinion, ladies and gentlemen, if you align yourself with what's going on in the candlesticks and then looking behind the scenes of what a candlestick could be doing, such as this right here, you can then put 2 and 2 together. I'll be straight with you, ladies and gentlemen, like I've said to you before. Most of the time, I come to the charts. This is what I did with the S&P today. Come to the charts. I looked at the S&P. I was like, vector candle 1, vector candle 2, vector candle 3. Cool. Now I'm just focusing on this. That's all I was looking at. That's all I pay attention to when I'm trading, because I'm only trading for a specific amount of moves, like 5, 6 ticks at a time. Okay. Now, that's for scalpers. Now, some of you or the majority of you may not be scalpers, and I would not recommend you actually scalping if it's not your personality. If you're a little bit more reserved and, you know, you like to go for walks in the park and be chilled, swing trading is for you. But if you're a madman and a nut job and you're like, you know, you want to run into walls just for fun and shits and giggles, scalping is for you, because scalping will make you run into a wall out of frustration, and it will make you run into a wall out of excitement. Like, it's happened to me. So, yeah, that's why I got a scar on the side of my face. I ran into the wall and I hit the corner of it, cut me on the side of my flipping eye. No, I'm joking. My sister threw a brick at my head back when I was a child. Yeah. Anyways, that's the truth right there. Okay, then. So, with that being said, what else we got? Here we go. Hunting for an answer for this, please. Geezer. Right. If my 1 hour vector splits into 3 smaller vectors on the 15-minute chart, which vector and time frame do I use if I want to measure a 50% of the retracement, the hourly? If your vector candle, if your candlestick is gray on the 1 hour time frame, okay? But when you zoom in on the 15-minute or the 5, let's go to the 15-minute, and it's made up of 2 vector candles and then 2 gray candles on the 50-minute time frame, you would take the midpoints of those vectors and then go back to the 1 hour time frame and pay attention to that zone. You could call it the hidden vectors, all right? So, for example, let's see if I can try and find one. Let's see if this one is a good example. You just mark that off there. It's the 1 hour time frame, right? We go to the 15-minute time. Let's assume there's red vectors there, okay? There we go. All right, then. Any red vectors? All right, so there's no vectors other than the exception of that last one right there. I need to go to the 5-minute time frame so I can see if we've got it. Here we go. Right. So here is the violet vector, red vector, right? So just the practice alone. So you could take, see, that's very, very small. Could be worth doing, but you ideally want to look for the bigger ones, all right? So we take this one. There's the midpoint of that vector, right? Then we go into this one, take the red vector high, take the actual low, and if it marries up towards the midpoint of the candlestick, then fine. If it doesn't, only factor in the vector candle itself, because the wick is too long. That means, look, your midpoint right there, look, you've only got this little bit of vector right there. You want to factor just the vector then, so just go into the actual candlestick itself. Now, I look at that. Look at that rejection right there. It's madness. You witness that and think, hold on, we've got stopping volume candles here. They've gone up. They've recovered the vectors over here. There's nothing left for them to do. And then when we look at it, we can say to ourselves, hold on a second, look at that. They've actually recovered that vector candle on the 5-minute time frame, okay? Look at that, full recovery. So there's not really any vectors left for them to come back into inside of this zone. So the only thing that you can do at this point, if you see price making a move up, they've swept the Asian session high, all right? The New York midpoint over here, the midpoints of the 2 vectors have been recovered, but there's no vector candle on the 1 hour time frame. Look. How would you know that there could be a possibility of them coming back up? You see this green vector candle, you'd say, okay, maybe they could be going up, but I might find resistances at this 50 EMA. But then when you're looking at it, you say, hold on a sec, man, they could come back into that. And that's a vector candle with no vectors visibly on the hourly. But you go down a couple of time frames, you can see how they reverse it. So I have broken down this system so in so much detail. I've said, what if it does this? What if it does this? Like, I've done thousands of vectors, hundreds of thousands of vectors. I've taken vector candles that are like this, gone back in the chart and found as many of them as I could, and found that when they usually appear here at below moving averages, I'd expect a recovery and then a continuation lower, right? I then take vector candles that have got wicks and I say, okay, if they appear at the lows, red vectors at the lows, and they're not fully closing at the lows, I would expect them to start marking back up. You might be looking at this thinking, of course you're going to say that it's hindsight. Yeah, well, this is the truth, all right? If you can't see it in hindsight, you ain't going to know fuck all about what to expect when you see it happening in real time. The system itself is designed to get you to be familiar with behavior, okay? You can then consider other aspects to it, like the Asian session high, the Asian session low. Here's one for you. Just go in the charts, ladies and gentlemen, and look at what happens every time they sweep the Asian session low first, whenever it's not taken. When it's taken first, they'll always end up going to the opposing side of liquidity, for the better word. And you can see red vector candle came straight back up into it. Red candle, green candle formation. I talk this shit all the time. It's the same thing over and over again. And if you're bored of it, you must be making some cheese, because that's all I can prove on this, that they're going to repeat the same thing over and over and over again. Look, red candle, green candle formation leads to a move higher. Go back in the charts and find as many of these as you can. And then when you see it happening, you say, well, when I went back again, I've done it 5,000 times, and I found that whenever it appears after a move to the downside, if I've got vectors to the left, I can assume they're going to bring it back up again. Trading is practice. Trading is practice. We fuck it all up when we start putting down too much size and we get shaken out, and then we don't give a system a chance. Man, you could kill it with MACDs if you give it a chance, you know? Sorry. Yes. I'm tired this evening, ladies and gentlemen. I'm tired this evening. Forgive me. How can I trade the hybrid system without the depth of market? You don't need the depth of market with the hybrid system. You understand the hybrid system. I trade the depth of market because I need the depth of market when I'm only looking for specific moves. I'm not a swing trader. I'm looking for the fast move in, out, 5-6 ticks at a time. Bang, bang, bang. That's what I'm looking for. So I need the depth of market because I don't want to have any spreads. I don't want to, and I'm not getting penalized in costs. So just look at the costs over here, okay? Cost me $63 to make $648. $63 again to make $311, but I took some losses on that. $67 to make $632, $559 to make $515, $63 to make $498, $63 again, $548, and you can see, okay? That's what it cost me. Collectively, it's cost me $939 to make $8,823 in a collection of trading, okay? This is today's event, so $4,200, all right? So it's not costing me much. I need that because it's suited to the way I trade, okay? You scalping on Bybit, you're scalping on MEXC, or you're scalping on a new exchange that we're with, BTCC. At least these guys are regulated, and they've been around for 12 years. So if you want to check these guys out, you do get a lot of leverage with these guys, 225x. Just be very mindful with it. But, yeah, description has the link for it if you want to go and check it out. Mad love and respect for that, okay? But, again, if you're going to do it in crypto, my opinion is not to. The idea is you want to, I mean, there are people that do scalp. Like someone was saying today that they scalped Matic like they were loving life. Yeah, commented today and says, Tino, scalping Matic was absolutely wonderful today. And look at it, man. Look at how nice it moves. Sweep, down, sweep, down, sweep. It's just perfect. I look straight back into vectors all day. Then you've got Ethereum taking a bit of a shoe bag, a bit choppy. The bigger the asset, the more liquidity is required to move it. That's why when they move Bitcoin and Ethereum, they move at speed because it's a lot of liquidity in an instance and they have to get it moved. Okay? That's what I think it is. SP500, yeah. Hard to scalp in crypto scam exchange fees. Yes, they are. I'm going to say this to you all right now, okay? You guys are not the exchanges overall, all right? Back when it all started, right? When I first started realizing that scalping crypto was not the way forward, okay? you can't be scalping Bitcoin. That's one thing for sure. All right. If you really want to grab worthy moves, but if you're going to grab worthy moves, okay, that means you're going to have to put down risk. Okay. That's why 95% of all the crypto influencers are swing traders. Most of them are swing traders because they're going to get had on fees. Now, a scalp can last a day or 15 minutes, you know, but a frantic scalper like myself, I'm in and I'm out. I have no bias when I'm trading. Zero. Oh, is it moving up? Quickly, go long. Is it going down? Quickly, go short. Oh, is it going up? Getting ready to go short? Yep, let's go short. Bang, down, up, down. God, man. But that's suited to my personality. That's why everyone is waiting for the next move in Bitcoin. It's designed to keep you in the trade. Look at your funding rate. You borrow liquidity from the market, leverage. You're getting taxed for it, man. Do I use limit orders? No. I don't use limit orders. No. I'm not in a trade long enough to grant the idea of a limit order. I have zero patience to wait for it. I'm at the whim. For example, I'm here. Let me just show you. So when I take a trade off the depth of market, I'm looking at it and I'm like, I can see orders are coming in. You've seen me do it, okay? And I see, oh, look, we've got 566 orders down here at the lows. Okay, that means someone is looking to start lifting the ask. Okay, I'm going long. I'm going long straight away. In. And if I take that logic and apply it at that instance, I go back to the charts and I see it's a stopping volume candle. I would expect a little bit more volatility from that point. Knowing the S&P and the nut job that it goes up, then it comes down and sweeps, and then it makes the move to the upside, okay? You can see the difference between two of the columns. You see where all these offers started to come into play and where were the bids. They weren't bidding, so there wasn't that much selling per se into the bids. So they then offered price out. They kept marking it up. And as they marked it up higher and higher, the bids kept coming in and held price to prevent it from going lower, which would be seen as a sell order right there. And then it continues, another 232. Then it continues, and it just keeps on going up. Okay, that's what I'm looking for. And sometimes if I can capture a nice swing trade on the S&P, then boy, I'm in. If I'm going to get like 30, 40 ticks, I will hold on to it. But in the first instance, if I'm in a scalp and I'm looking for 5, 6 ticks, it would have to go aggressively in my favor to hold on to it. Otherwise, I'm out for about 5, 6 ticks at a time. So that's how I do it. Yeah, NASDAQ is horrible. NASDAQ is a wind-up merchant. Scalping Bitcoin on the 5-second is Mr. Casper's favorite though. He even has a course for it. That's correct. Yeah, you can scalp it on the 5. Look, you can scalp Bitcoin on the 5-second chart, but are you holding the trade for 5 seconds? You know, it's by the time you've opened the order, you really need to see Bitcoin making a move to the upside within an instant. It's for me. It's not for me. You know, I can open a trade and literally you could make. Well, look at yesterday's video. It was $500 in a matter of 30 seconds. Okay. It cost me what? $25 to play that trade, you know? And it just shot down in my favor with the vector candle recovery. Bang, in, out, finished. That's how we do it, you know? But it's all about the exchange you use. Because if you're getting had on fees and you're using too much leverage, then you're going to get shit on all day. How you manage your risk. On my funded accounts, I say to myself, right, I'm happy to lose $1,000 a day. Okay, on all my funded accounts. So today I traded 1, 2, 3, 4, 5, 6, 7, 8 funded accounts. So my risk in the day is $8,000. All right, that's $1,000 on each account. You know, some days I could be down $10,000. Other days I could be up $30,000 on the funded accounts. I've got the videos and the live streams. I've shared them to you all before. You know, when I'm trading all 13 accounts, that's when the day can get a little bit expensive when it goes against you. So even if you were to hit $1,000 drawdown, that's 13 grand out the window. All right. But then sometimes it can go really against you when you're down like $2,500 because you've got the balances to allow that absorption in the loss. and it becomes a $26,000 loss in a day, and you're like, that's a little bit too much. Well, it's only $2,000 on each account, but yeah, you're doing it 13 times, bro. So psychologically, it can have an impact. But sometimes I'm just like, what was it? A couple of weeks ago, down 20K. I lost 24K. I was like, yeah, that's my day. You know, that's trading. That's how the game rolls, you know. Bitcoin is one of the hardest assets to trade. Why should I trade it? Bitcoin, in my opinion, do I think Bitcoin is the hardest asset to trade? No, it's not. Bitcoin is very prone. You've got to get Bitcoin psychology down. You've got to get into the mind of the crypto trader, you know, the masses, all right, to understand what Bitcoin's doing. Because right now, everyone in crypto is like, huh? Oh, it's going up. All right, cool, it's going up. All right, cool. Might come down a little bit. All right, cool. But it's going up. All right, cool. So we drop all the way down to 65,000. It's going up. All right, cool, bro. It's going up, bro. That's exactly all that anyone says in crypto. It's going up, man. Forget what you say about Bitcoin. Look, I'm just being logical with you all, okay? This is a new asset class. Bitcoin has not stood the test of time, okay? Bitcoin will be going into its first, it's not its first Fed pivot, but it will be its second pivot, in my opinion, with Wall Street, all right? Or not with Wall Street. Without Wall Street was the first one when they started to increase the interest rates. And now we're getting to a point where they're going to decrease the interest rates. This will be Bitcoin's second pivot, but with Wall Street in Bitcoin, okay? And that Wall Street is BlackRock, all right? So put that into perspective. So Bitcoin has yet to experience, you know, the repetition of what happens cyclically in the stock market. You can say, yeah, but Bitcoin's been around for, you know, back in 2009, going up to now. Yeah, but no one was dealing with Bitcoin then. There ain't no one on Wall Street that was even considering digital money back then. You know, it wasn't on the radar. But now it's a different story, you know. How do you avoid stupid trades? It's a very easy answer. Don't take them. How do you classify a stupid trade? A stupid trade is how you're feeling before you take the trade. If you feel down, you don't feel yourself, you got a headache, which I have 35,000% of the time, all right? If I have a headache, for example, I'm not trading. No, because I need to be in the zone. I need to be zoned in. I've got to concentrate. I'm staring at numbers up and down, up and down. It really does have a taxation on me. You know, there are days where, like today, I didn't eat today because I found that if I would eat some food, that's going to make me feel a little bit lethargic. And I need to be on my A game. My stomach needs to be empty. I need to drink my water, happy days, and I can focus. I can't eat when I'm trading. No chance. That's how I see it. That's how I am. You know, it's like, for example, I can't eat and drive. Like people that go on long journeys that eat, I can't do that because if I eat when I'm driving, I'm ready to go bed, bro. Like I've made my body believe that when you eat, you sleep. What's the best 10 coins to trade daily in crypto? Ethereum, Matic. Okay, let's go for it. Ethereum, Matic, to a store of value. And if you want to, you know, make sure that you don't experience any wild price swings, store of value is XRP. What? XRP. Down to the 52, ladies and gentlemen. I told you 51, I'm out, you know. But yeah, store of value XRP. Anyway, so Solana, Ethereum, okay, Matic. I would say BNB because BNB does move really nicely. You know, this is BNB on the hourly. You know, when it moves perfectly. I'd rather than 10, I'd stick to these: BNB, Solana, Ethereum, and Matic. In my opinion. Someone else might say, yeah, man, Waves moves much better. Probably does. Like so. Look at that, man. They've come straight back down into those vectors we all marked off. Unbelievable. They've ripped back down again. Bit of a choppy asset. Not really interested in that. You know? Okay, here we go. Where can you learn scalping from me? Look, there's two ways you can learn. You can sit at the charts, okay? And you can watch price. have an understanding on how price operates. You can go to the Traders Reality website. You can take a course on there. Okay, you can do all of that. All right. But before you do any of that, you have to make sure that you are a scalper by personality. If you're impulsive, if you can make decisions quickly and have conviction, scalping's for you. You can't be a scalper if you can right, I'm going to take a short. But maybe because someone on X said Bitcoin could do that, you ain't got time for that. You either take the short, get out. If you're wrong, you're wrong. You won't know if you're wrong before you take a trade because the trade gives you the feedback about whether you are right or wrong. You're in no position to make the conviction that you are going to be right or wrong before you take the trade. It doesn't make sense. How are you going to know how to drive a car if you don't drive a car? That's the logic. And that's what trading is about. You will never know what the outcome of a trade. And that's why people are like, should we long? Should we go short? Go short. Go long. Because from the moment you go long or from the moment you go short, you will know if it's time to close the trade or not. And the time delay that you put from the moment you open the trade to how long it is, it's going to make you realize that you need to be out of the trade. That window of feedback that you're going to be generating from your experience in the trade is going to be stored in your trading psyche, in your trading soul, in your mind. Then you'll come back to the charts and be like, I ain't going to do that again with that amount of risk. Let me cut it back down because I don't like the feeling of that. Okay? And then you come back to another position. You're like, right, okay, I'm going to take a short from this point. What do I expect? Well, my risk is very, very low. So I can really absorb a sharp move up and I'd be good. Hell, I would even add to it if I have to. If you can have that conversation with your risk, technically you'll be able to capture some decent moves. But you won't know unless you're in the trade. That's what I say to everyone. People in the Discord say, so shall we short Bitcoin now? If you want. Nah, seriously. If you want, short it. What's stopping you from shorting Bitcoin? Because you need me to tell you? How do I know now's the time to short Bitcoin? I don't know. I'd need to short it. In the Discord today, when we were doing the trading, I was in positions. And that's why I was reeling off the information. We need this to happen for this to happen. I'm in, I'm out, and everyone was trading in there. Well, you won't know until you're in the trade. You know when you're in. That's it. Tina, you claim yourself a scalper, and you obviously are. Why do you hold XRP? What did you change your mentality from a scalper to a holder on that coin? Look, I don't scalp crypto, okay? If I do scalp, it's Ethereum or Matic, okay? But XRP is just a holding thing, you know? It's just, it's in a ledger somewhere and leave it be. Well, it's actually with me, you know? So it's just hold XRP. That's the only holding thing I do. I don't need to look at its price. I just know it's going to be at 51 one day and then back to 52. What a brilliant asset. Don't need to worry about anything. If I know it can stay between 51 and 52, then anything above 52, it's a win. 52 cents, 52.04, 05. That's a win for me. That really is a win. Anyways. You can be a holder and a scalper. Look, listen, funded programs. I'm with Apex. Apex have had a little bit of heat because they're changing things around. People are saying they don't do payouts. They do payouts. If you're not sticking to the criteria, like I use the same lot size on my account, okay? And I had a payout the start of this week, and I've got a couple of more payouts coming out for this time, yeah, because it's past the 5th, okay? They even sent me another email saying that, well done on your consistency. Get yourself another T-shirt or get yourself another cup. So they're sending me out a free gift for me staying consistent. Then you get people that all shit talk about them saying that they don't pay out. And then what, are they really revealing why they're not paying out? And I've never had a problem with them. Never. Now I'm going into Top Step as well. I'm utilizing them because it's important that you have more than one funded account. Because if you've got one funded account and you have a bad day, there's no more trading. Hell, you could blow your account, okay? At least when you're going onto another platform, it's a different set of criteria, a different set of rules, so you're just having to evolve as a trader managing this money. For me, funded programs are just free money. That's the truth. Okay? Get as much of it as you can and rinse it for what it's worth. Any profits I make off my funded accounts, they get chucked into my personal trading account and just letting that bad boy grow. Because however long these funded programs are going to last for, at least I'm taking something from them. I'm literally on a heist. Take. Go to one funded program. I'll try and do that. Get past the challenge, get a payout, happy days. And then I stay with them because it's costing me nothing. Then I'm just literally just trying to trade because it's not costing me anything. You know, that's how I see it. Compound interest, yeah, of course. My crypto portfolio doesn't have much. It has a few coins. It's not any meme coins, all right? Got Ethereum, a little bit of Bitcoin, and XRP. Most of it is XRP, Phantom, and BNB. Because I do a lot of staking. I stake all over the place. Binance Smart Chain. And Fly. Yeah, that's pretty much what I've been staking since I got into crypto. First time I got into crypto, I started staking. I'm all good, Priest. No, I got rid of the Reddit position and I went into silver. I loaded up on silver. I got rid of the Reddit position. Right, where's Reddit? Here we go. Look at that. So I was in at the 40 mark, 40, 50, yeah, $50 mark. It's come out really well, you know. They're coming back up, but I played silver instead. Here we go. Where was silver? Hold on. Where's silver? Yeah, I've been playing silver. I've been buying silver. Been buying physical silver since it was around $19. Yeah, down here. $19 in that range. And then it's gone up loads. $31. Physical and spot. Okay. And same with gold. You know, I've been playing gold. I've been buying gold since 1700. So that's where I've been buying gold. Around about the same time I bought silver. And gold physically and spot. That's what I'm doing. Contemplating getting rid of my XRP to plant it all into gold and silver. Because if AI is going at the rate it's going, they're going to be sapping up all of these critical metals, you know, just so they can get things going. But I'm old school when it comes to that. I'm old school. Happy days, Zanu. Be a swing scalper. Oh, God. Did the ghost close any doors lately? Nah, man. How can we scalp gold? Easy. Very easy to scalp gold. What else we got? Can you pair FVG and order block with hybrid system? Of course you can. It's a vector candle. It's an imbalance. That's all it is. You know, and the claim of who made up the idea of a fair value gap is it's an imbalance. Price moved very aggressively. Do you want to see an imbalance? There you go. I'll show you what an imbalance looks like. One there. Okay. One there. Two there. Another one there. A little one there. Those are imbalances. Because the book, here we go. Look, here's an imbalance. See that? Imbalance is in there. All right? Damn, this stream is long. Those are imbalance. I'd expect them to get filled. It's just an imbalance in the chart. You know? Do I need to see that on a candlestick? Well, no, I can see it in the depth. You know? Man, this S&P is just absolute beastie. Look at it. Filling those imbalances up there. Should get some orders coming into play because they can't really have that in the order book. 2006, man, they are meaning business with this. Tina, where do I learn about order flow? Everything you need is on the Traders Reality website, if I'm quite frank with you. I talk about order flow on there. I talk about the depth of market. I'm scalping the depth of market. Everything is on the Traders Reality website. Platinum members get all of that. And every week we do a weekly breakdown of everything, of the trading, of the setups. It's all there for you, ladies and gentlemen. Yeah, after tomorrow, the S&P will be easy to trade. You know, it really will be. Wicked. All right, well, ladies and gentlemen, I'm going to love you, leave you. But mad love and respect for tonight. I know I've kept you way too long, and it can be hard for someone to sit and watch an hours-long stream, so forgive me for that. But again, if you're new, subscribe, hit the like. We do this every single day. We've got non-farm payrolls tomorrow. It's going to be an important time in the market, in my opinion. So try and come away from risk, maybe. I will always endorse the idea of coming away from risk, especially during the non-farm payrolls. When we don't have non-farm payrolls, we have other boring data. It's easier to trade, in my opinion. Yeah. Other than that, mad love and respect. I'll check in with you all tomorrow morning. Stay safe, gang. Peace.